Hey guys, welcome back. So this video series we're talking about trading setups and strategies that are freely available on the internet or in books. This one is called the 3-day gap fill. Again, it's by one of my favorite traders, Linda Bradford Rashke. Go and check out some of the other previous videos where I talk about some of her other strategies. Some great strategies there, or at least great foundations to build your own strategy from. Alright. I think this is called a 3-day gap fill, but we can call it what we want. These are the gist and these are the rules. And I know that these are the rules of her setup. These are the rules for the buy side. Obviously, if you're looking at the sell side, it's identical. Just flip highs, lows with buys and sells. Obviously, it makes perfect sense. Okay, so number one, the first filter is that today must gap lower, but not fill the gap. So if we get that, then we move on to step 2 of the filter, is we place a buy stop just above the high of today. So you've kind of got to have 2 days in a row where you get a certain sequence of events that allows you then to get involved potentially in the trade. Number 1 is the gap lower. Number 2 is the gap not filling. And then the next day you have a buy stop that gets you into the trade. Obviously a buy stop entry is just above the high of the gap down day. Okay, and if you get filled, then you use a stop under the gap down day low, and that buy entry is only valid for 3 days. So you're looking for that momentum down, the gap down, the attempt to push back up, then the next day you're buying the continuation, if you like, but you've got to use a whole range of that gap day as your stop, which obviously can be quite big. Let's go to the charts and let's see exactly what's going on. Let me squeeze that in. So let's look at our usual one, which I kind of is our go-to, which is the SPY. The SPY is the SP 500 ETF. The only reason I use this is because as a spread better, we could spread bet perhaps if we're using the diamonds. Let's use diamonds as an example. Exactly the same kind of chart. This is the Dow Jones ETF. So pretty much if we're spread betting, guys, we can spread bet our cash Dow or whatever we want, Dow or US 30 kind of product. Use these strategies if we choose to and prepared to take the risk, but then use the triggers based on these ETFs. The reason I use the ETF is because they open at, the cash open, they close at the cash close. There's a definitive open and close, which means that this setup works nicely, or can work nicely, or the rules of the setup make sense. Okay, so let's have a little scan through. We had a big rally, haven't we, on this? The idea is that we're looking for a failure to continue after the gap. Now, do we have very many of these? There's one here, isn't there? Actually, I can see one just here. I'm not sure how we'd work this with the gap. So we have this here, guys, is we have a gap higher and the gap doesn't fill. So we now look for an entry short under that low, which the low is 199.75. Let's just check the rules to make sure we haven't got any rules that say it has to be a red candle or a green candle. It doesn't, just says the gap doesn't fill. So there's no rule specifically with her criteria. Obviously we can add our own. Obviously we can add our own if we wanted to on that. Let's have a look. So we have a gap up, it doesn't fill. If we zoom right in on it, because we are literally looking at this, whoops, I've just drawn on there. We are looking literally at a couple of candles here, aren't we? Okay, so the high, the close is 198.84 and the low of this is 199.75. Okay, so technically speaking, our short entry would be just below the low of this, because we're reversing the rules on the little slide we had there. So 199.74 ish. So we're probably in at the open here. Where's the high of this day? So we're in at some point here, 199.90. I guess. Is there a rule for it gapping below it? I don't know, but anyway, we're in here and we're going to close it when we fill the gap, and the gap of the close, if we're looking from close to close, which is technically what the gap is, 198.84. So we're in a pretty decent profit. That seemed to work well. It's got to be 3 days. It's in within 3 days. Does it mean in that including the gap down day? Not sure. I have to do some research on that, because actually that's 3 candles. Does that mean that you can't have it on the 4th candle? Does it have to be within 3? So maybe that's not valid. Maybe it is, maybe it isn't. I just guess it depends on how you structure it and how you kind of define your own rules with it. Let's have a look at something else like crude oil ETF. Again, perfect for us if we're spread betting, gents and ladies and gents, should I say. I know there are plenty of ladies watching as well. The good thing is we can spread bet it. We can use the ETF because it's got the structured open and close as the rules for the trade, and then trade it on a crude oil, cash, or whatever it may be. Do we have a setup here? Looks like we've got a gap lower, filled the gap. We're probably long here. Whether we trailed it, I guess we look for the gap fill, didn't quite get it. You're probably going to be stopped out on that low there, aren't you? And that's, I mean, you know, I like setups that quantify the risk. Don't get me wrong, but I obviously a little bit concerned. Actually, one of the good ones is standing right out. Let's go back to concern in a second. Here's a gap lower here. You can see nice little gap lower. Let's get the brush out. A little gap lower on this candle from here to here. We probably long on this candle here as we break the high. The stop is at the low of this candle here, strictly by the rules, so we're not out here, we're in, and it looks like it's the second candle we're entry, so we're okay with the criteria, the 3 candle criteria, and we fill the gap probably on day 4. Perfect, that looks fine. Okay, going back to my kind of concern about this is that obviously if you've got a big range after the gap lower, that's a big kind of stop you've got to have. If it, let's say the gap lower is on this candle here, you know, that's a decent range. If you're thinking of crude oil, I know we're using USO here, but USO and crude oil, you know, it's going to be a big range on crude. So you maybe don't want to take it perhaps if the stop is really significant. But if you've got a decent stop, let's say the ratio of the stop to the gap fill is 2 to 1. So in other words, you've got, you know, a 10 tick stop. It wouldn't be 10 ticks, would it? But say, you know, it's 50 ticks to 100 tick gap fill. Maybe then that's worth taking because you're adding their risk reward on your side. I'm not sure. If you've got any thoughts on that, then leave your comments below. Would be interested to hear what you guys have got to say about that. And how you would perhaps manage the stop, perhaps make it a bit more efficient in terms of not being so risky. And you know, any other options where you think you can add a little bit of value to this strategy. So that's the day 3 strategy. I think the key part of this is you're looking for the fill very, very quickly. If it kind of loiters around after gapping, you don't want it. That's why you got the 3-day criteria. Anyway, guys, give me a thumbs up if you like this kind of trade. I'm going to do this video that talks about trading strategies. We're going to do more videos like this where we talk about strategies, setups, dig into them, look at other people's strategies and see if they're valid, see if we think they're any good, see if we can take bits from it, see if we can add to it and use it in your trading, add a bit of flavour of your own type of trading. Is it a good foundation or not, or discard it and look at something else. That's what it's all about, guys, trying to make us better traders, the best that we can be. Give me a thumbs up if you like it. Don't forget to subscribe if you want more video, if you want to see, should I say, more videos from me and other traders on this channel. Any comments, stick them below. You know the drill. See you next time. Good trading. Take care. Bye bye.